All right, let's bring Diane Swonk in here. You can bring the numbers up on Wall Street, too, as we talk to Diane about this. The economist joins us with stocks plunging, closing lower. What about that jobs report? I guess it brings up, Diane, a couple of different questions. I'll start with the one I raised about the Fed and whether they waited too long to start their cycle of rate cuts. What do you think about that today?
Well, I think they're certainly feeling remorse today that they didn't actually decide to cut in July. They certainly debated it. They hadn't queued it up. It wasn't, they wanted more evidence that inflation is cooling. This data is a bit distorted, as you mentioned, by Hurricane Beryl, which, took out more than 1 million people in electricity during the week of the survey. And even though they said on the report it wasn't affected, it was. This is the highest July on record, and you showed the numbers. It really is stunning. That said, we've seen the pace of hiring slow. Layoffs are at a record low in terms of the pace of layoffs in late June, according to the job openings and labor turnover survey. However, that makes us much more vulnerable to any kind of external shock, including a hurricane. And so it is prudent that the Fed has said that it's now more attentive to both sides of its mandate. That's getting price stability and full employment. Well, I think this means they're going to have to cut 0.5% in September. The other part that we're not talking about is other data that came out this week, and that is productivity growth. One of the things that we saw during the soft landing, which was really hard as we were going through it, people look at it with rose-colored glasses in the past on 1994, 95. One of the things we saw was that productivity growth picked up, and it made it easier for the Federal Reserve, did the heavy lifting for them in terms of inflation, and allowed Alan Greenspan to start what was called the growth experiment, where he allowed unemployment to fall to see how low it could go without triggering inflation.
So things are different now. Let me ask you how, but first, guys, bring up the closing numbers just for our audience, full on the screen if we can on Wall Street, just to show where the market ended up for the day. Now that we passed 4 o'clock Eastern time, the Dow down 600 plus. So that's where you're going to settle in. 1.5%, 1.8%, 2.5%, or thereabouts for the NASDAQ, which is obviously a terrible day. A lot of tech news. I mean, Intel's cutting jobs. Amazon's been rough. The iPhone sales for Apple were down. So, yeah, it's one day, but it was not a good day. Go back, Diane, to what you were talking about, which is that this is a different world now, different economy now?
It is. We actually triggered in this month what's called the SOM rule, which has been a pretty reliable, extraordinarily reliable recession indicator. The only recession it didn't predict in the last 50 years was in 1976. And we breached that threshold in this month. And so many people are like, oh my gosh, it means we have to have a recession. Well, Claudia Sahm herself has said, wait a minute, the world is just so different post-pandemic. There's a lot of mixed messages in the economic data. The 2 surveys we have that are represented, the survey that captures unemployment, the household survey, that one has shown almost no growth in jobs over the last year. None. 57,000 total over 12 months. In the payroll survey, which counts the number of paychecks we're actually generating, there's 2.5 million. That's above the 2.2 million pace of the 2010s. And that's more consistent with what we've seen in terms of overall consumer spending, overall economic growth, and what we're seeing in the broader economy. Now, is it easy out there? No. How did we get better consumer spending in the second quarter than we did in the first? Because consumers pushed back on higher prices and retailers capitulated. They discounted, and they're not back to anywhere near where they were in 2019. Right. But when they discounted, consumers came.
All right, one more thing then. Plain English, plain translation for anybody listening. They say, all right, are we going into a recession or not? Is the economy just cooling off a little bit? The Fed will handle it, or are we worried about a recession? What do you say?
Well, you're always worried about a recession, but I think we're going to actually skirt a recession. The path to a soft landing is much like the path to gold. It's paved with tears, setbacks, and self-doubt. And we've seen that can still get you the gold. And I think that's where we're at with the Fed. They got a lot of self-doubt today, but they've got also a lot of room to cut rates. That's not a place we've been in a long time.
No, it's not. Now, September meeting, we'll be watching for that rate cut we think is coming. Diane Swonk, thank you very much. Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.